over the past 3 or 4 years, we've seen a huge increase in fertiliser prices. And this has not been, of course, divorced from the rise in crop prices and the role of speculators even in many people's minds. What are your views on that?
There's actually a strong correlation between fertiliser prices and crop prices, and the connection is obvious. To increase crop production, you have to use more fertilisers. So when crop prices are high, farmers look to maximize their yields, and so they will optimize their fertilizer application. And so this creates additional demand for fertilizers. There's also a factor that when crop prices are high, farmers can afford to pay more for their inputs. So there's both a supply-demand aspect, but also an affordability aspect. And when the farmer sees very high crop prices, he wants to ensure his yields are as high as possible. So he will make the investment in fertilizers. It's not a perfect correlation, because you can get supply factors in fertilizers. If there's a lot of new capacity coming on, that might dampen the impact of additional demand. But correlations are generally close, over 0.7 to 0.8. Occasionally you'll get a division, but essentially when farmers are doing well, fertilizer industry does well.
Okay, so I understand there's a lot of new capacity coming on stream in certain parts of the world, North Africa, the Middle East. Would you like to talk about that and how it may affect those prices for coming years?
Yes, the price spike in 2008, triggered by the strong agricultural prices, has stimulated a lot of new investment in all three nutrients. In the nitrogen side, you're seeing a lot of investment in North Africa. For nitrogen fertilizers, the essential feedstock is natural gas. So in the last 20 years, the investment in nitrogen fertilizers has primarily come at places which have low-cost gas. So in the Middle East, we saw a lot of development through the 70s, 80s, and 90s, which is continuing. We've got new plants coming on in Qatar, Abu Dhabi, and then Saudi Arabia over the next few years. But an area of new development in the last few years, we've seen a lot of development in Egypt, and this year we're seeing a number of new plants come on stream in Algeria, and they'll be producing urea, which is the main nitrogen fertilizer traded internationally, and they'll be targeting markets in Europe, in the United States, Latin America, and in Africa. So there's a lot of development in the nitrogen sector there. With this new development, and fertilizers are a commodity, so you get commodity cycles of investment. So we're seeing supply growing more rapidly than demand over the next few years, and then demand catches up and you'll get another cycle of investment. So we see this additional new supply, meaning that over the next few years we're likely to see nitrogen fertilizer prices fall internationally, because even though demand will remain strong, supply will grow faster. We're seeing similar things in phosphate and potash as well. On the phosphate sector, most investment recently was focused on Morocco, which has the world's largest phosphate deposits. But in the past year, there's been a major new project in Saudi Arabia, and Saudi Arabia has now becoming a significant factor in the international market. So that additional supply coming into the market, that plant is currently ramping up. It's the Marden project, and that will probably put some downward pressure on phosphates, because again, demand is growing strongly, but supply is growing more rapidly. In the potash sector, there's a lot of brownfield development. The biggest producers in the world are in Canada and Russia, and also in Belarus, and all the major producers are making investment in brownfield developments. And we have, for the first time in 30 years, some greenfield investments. There's new mines being built in Russia. There's a new entrant there into the industry, Eurochem. And K+S, the German potash producer, is going to build a new mine in Canada. Vale, the big Brazilian mining company, has got a big project in Brazil. Of course, the big one is BHP Billiton is looking at developing a big new mine in Canada. It's not signed off yet, but they've already invested $1 billion, so it's a serious investment. And that's an important point, is that fertilizer investments don't come cheap. To build a world-scale urea plant, and that's just over 1 million tons, and the intermediate plants, ammonia plants you need for that, that's going to cost you over $1 billion to build that plant. To build a 2 million ton a year potash mine would cost you probably now about 2.5 billion. So you're looking at massive investments, and the fertilizer industry is in a way quite proud of the fact that it is making these investments to provide fertilizers for food security going forward. But it's big bucks.
So thank you. The credit crunch hasn't really hit the fertilizer sector so much then.
That's a very interesting point, because fertilizer prices and fertilizer demand, and particularly in a couple of sectors, did take a hit in the latter half of 2008 when the credit crunch hit and when food commodity prices fell, and we did see sharp drops. Quite interestingly, that didn't slow down development at all, because that was very much seen as a temporary blip. And of course, you can't build a fertilizer plant overnight. Even once you start building, you're looking at about 3 years for a nitrogen fertilizer plant if you're on an established site. A potash mine will take, from inception, possibly as long as 7 years, and a phosphate development 4 to 5 years. So these are long-term investments. So when companies are making these investment decisions, they're looking at not what demand is this year or next year, but what demand's going to be some years down the road. And the fundamental basis of demand growth, of increased population, of changing diets, which is probably actually a bigger factor in terms of more meat consumption. That means that producers have become confident that demand will grow. The problem always is, as in a commodity market, that everybody thinks the same and you end up with more capacity than you need.